For more on this, we're joined by Terence Hove in Johannesburg. He's a senior market strategist at Exness. Welcome back to the programme, Terence. Now, the Nikkei has retreated from all-time highs. Is this pullback simply profit-taking or the start of a broader reassessment of tech valuations across Asia?
Yeah, good morning from South Africa, and thank you for having me on the show. I think what we're seeing right now is more of the short-term profit-taking. I wouldn't say it's a broader change in trend or sentiment around the tech industry, but certainly we've seen the all-time highs that have been recorded, and a good time for investors to be taking profit and also to recalibrate in terms of, especially when we look at what's been happening in the wider tech sector, across the globe, especially around capital expenditure. So I think we're seeing a lot of investors reassessing what that outlook would be. So this has been a good time for profit taking. So that's what more we're seeing. And of course, a bit of jitters coming through from the Bank of Japan, the BOJ expectations, some hawkish signals coming out of the BOJ, so investors are taking that into account as well. But I don't see this as being an overall change in direction, but more the short-term profit taking.
Over on Wall Street, Nvidia delivered strong results, yet its stock tumbled 5%, triggering a broader sell-off. What are the main concerns of investors here?
Yeah, I think investors are quite concerned about the sustainability of the AI boom, concentration risk, and the high valuations that we've seen from the tech sector, including Nvidia itself. When we look at the AI capital expenditure and how much capex is being spent on infrastructure, for example, the sustainability of that, in the next year or two and post that is what investors are really now becoming, more concerned about, and taking into account the large amounts that have gone and are going into this, and the extreme concentration of AI in data centers, so again, that concentration risk as well, and which ultimately is leading to those higher valuations. And again, Nvidia has been a big story around AI, has been a big name, especially around tech, over the past few years. So there's competitive pressure as well. Investors wanting to see other competitors come up because Nvidia is really leading the charge. So a lot, as we have seen now, that comes out of Nvidia tends to affect the wider sector. So I think those are the main themes when it comes to the Nvidia story.
And with big AI-linked names like SK Hynix and Samsung under pressure across Asia, are investors questioning the sustainability of the supply chain here?
Yeah, I think investors are certainly questioning the sustainability of the sector as a whole. I think the supply chain remains robust with the demand that we see, but they're recalibrating, short-term positioning for sure after the AI boom and AI run. It's still going on, but for at least this immediate part. But I wouldn't say, the supply chain in itself being a concern, but rather the entire sector, to the point that I made earlier on the sustainability of that.
All right, Terence Hove in Johannesburg, thank you very much for your analysis.
Thank you.